All right, hello everybody. This is Courtney Sabi Lawrence. I'm here in Bangkok, Thailand with the UNDP teams of teams, and specifically, we are kicking off a series that is going to go on and off throughout the month of August, but really dedicated to strategic recovery and the discussions that COVID-19 has helped us open, the provocations as well. So just in a minute, we'll share a little bit first about the big picture in terms of why we thought this series especially would be relevant and meaningful, and also why we wanted to open it up outside and beyond just the UNDP, but especially learn from what is happening in the ecosystem all around the world. This collaboration is taking place across the Asia Pacific region, but also with the Europe and Central Asia teams. So with that being said, one of my colleagues as well, Svelta Baeva, she's on the line with us. And we're going to hand it over to Millie, who heads a lot of the strategic innovation work globally. And you might notice literally on the screen here, we have something to share with you that's been a part of the internal discussions and certainly with the world as well. But just the flavor of how this connects and ties into the discussion that Dominic Koster with Climate KIC is going to be carrying forward. A lot about the transformational piece, but the financing and the systems change dynamic as well. So Millie, over to you first before we get going with the full session.
Thanks, Courtney, so much. So hello, everybody. Courtney has asked me to speak a little bit about this paper that we put together on the ask of the administrator, who has held a number of close conversations with super clever people about, where is the world going to over the next couple of months, and has asked us to connect those with many conversations that a colleague who has co-wrote this, Indy and I have had, and we have been inspired quite a bit and tapped into the work that Asia Pacific region is doing with the Next Gen Gov. And one thread that has gone through that paper is that we have seen a big space for change and transformation that the pandemic has opened that really wasn't there before. So a lot of the stuff that Dominic will speak about today has been relevant for years. But I think the big change that we have now is that I would imagine, and I don't want to speak on behalf of Dominic, whereas previously he might have had to sit down and convince some people to come on board, now people will be coming to him as one of the very small cohort of people who can speak competently in terms of how do we align different sources of finance for transformation. So just, a note with the paper, one of the things that we have found is the role of state obviously has changed significantly. And the interesting part is that in a lot of the literature and theory, the role of state has been looked upon as state is there to fix market failures. State is there to bring in efficiency into the public sector. And there is very little in terms of what type of capabilities, what is the new statecraft? What type of capabilities must be present in order for the state to bring about transformational change, in order for state to co-create or build entirely new markets, which is what we are seeing right now. When we looked across the world, some of those states that have had more options to flatten the curve, as it were, flatten the curve meaning a catch-all phrase, not just to flatten the curve, but to keep the economy on life support, to keep people at home fed and well taken care of, have been states who have been able to tap into the cumulative investment into human development. And one thread that has gone across all of those cases, so from South state of Kerala in India to Rwanda, to parts of the Brazil and many other countries, I would say is this question around, we made these big policy moves, mainly being forced from the pandemic. We are now moving from immediate response to the recovery. How do we fund system transformation? We're moving into a longer term marathon. This is something that will be with us to stay. Everything has changed. If you think about how cities get funded by taxes and jobs and real estate, a lot of those things pandemic has taken away. So from my very selfish perspective, I couldn't wait for this webinar because Dominic really is one of the few people who can speak with competence and who works for the organization that works with governments who are asking these questions and want to understand how is system transformation funded. With that, Courtney, over to you.
Great, thanks so much for adding that bridge of context, Millie. And so in the chat box, I also just shared the link to this discussion paper that is available online, and is certainly a piece for a conversation to go forward. So without further ado, we're going to be passing it over to Dominic Hofster, who's kindly agreed to be the very first speaker of our series. Next week, we'll also be connecting with systems change, specifically around systemic entrepreneurs with Ashoka and others. But more about that towards the end. But this is really, again, going to be run less as a formal presentation and more as a space for discussion. So Dominic has shared from his experience with 9 years in hard finance and over into this, this other space, right, of application to particularly different sets of experiments, as well as a portfolio approach, which we'll share more about, emergent models. So we are bridging theory and practice, and we're also looking at other demonstrations and cases that we can learn from and then actually apply towards. So Dominic, if you'd like to go ahead and share your screen, I will make sure that that's possible. And a big thanks to those that are just joining. Again, you're invited in the chat box to let us know where you're dialing in from, what team you're on. And any questions that pop up, you can park them in the Q&A, and we'll certainly get to that for the discussion part. So over to you, Dominic.
Brilliant. Thank you so much, Courtney. Just to check, can you see my screen? That come through? Brilliant. All right. So I'm very excited to be able to speak to you today. You can tell by me wearing a shirt in my living room. And I'm excited about it for two reasons. Because first of all, some of the stuff that I'm going to talk about will resonate with you. A lot of you will actually get it, which is a change, because I usually get a lot of blank stares and long faces when I talk about systemic investing. And the second reason why I'm excited is because this is really the first time we present Transformation Capital to a global audience. And I say that in part to also let you know that for those of you who expect a lot of empirical evidence and experience from our application in the field, you might get a little bit disappointed, because this is an emerging model that we haven't tested in the field yet. But I will tell you, as we go through the presentation, what we have learned from our field work. And then more importantly, we'll end up on a note of how might we join forces in putting some of that theory into practice in the systems where UNDP is already working. A few words about Climate KIC before we get going, just for those of you who haven't heard about us before. We are the European Union's Climate Innovation Initiative, started about 10 years ago in 2010, headquartered currently in Amsterdam, and supported by the European Institute for Innovation and Technology, which is a body of the European Union. We, over the course of those 10 years, have pursued what I would call a relatively traditional innovation model, heavily focused on supply side innovation and delivered through three main strands of activity: entrepreneurship and startup incubation, education, and collaborative innovation projects. And over the course of those 10 years, we've generated what I would call some impressive KPIs. We have incubated about 1,600 climate positive startups, which have gone on to leverage a lot of capital. We have also helped our partners produce over 600 climate products and services. We've had 44,000 people go through our education activities. So we've had quite a large footprint in Europe, and more recently also globally, of organizations that are involved with us in sort of the mission of working on climate change. Now, a couple of years ago, we've taken a hard look at what we have accomplished and how that stacks up against the ever so pressing and tangible challenge of climate change. And we've come to a realization that this traditional innovation model of single point solutions, isolated projects, often in a siloed and fragmented way, often with a focus on technology, really tends to lead to incremental impact. And we've recognized that given the challenges of of systems transformation, this model might not be as effective as it needs to be. So we've embarked on a strategy redesign process with our partnership, and landed on a systems innovation model that is anchored in portfolios of innovation experiments that we compose in a deliberate fashion, with a view toward generating intelligence for possible transition pathways for a specific mission in a specific systems. We've also broadened what we call the levers of change that we engage, technology being one and continuing to be an important one, but we've started to do much more work around policy and regulation, about social innovation, cultural interventions, around public sector procurement, etc. And we've invested heavily in our ability to learn from what emerges from these portfolios and to equip ourselves to do sense making well, which I understand is something that UNDP is also quite adept at, particularly in your accelerator labs. And we believe that this systems innovation model holds much greater promise for unleashing transformational impact. What does that mean in practice specifically? This is a graphic that our partner Dark Matter Labs put together for us. It visualizes what the process looks like in one of our deep demonstration programs. This one is on cities, and we're not going to go through it in details, but what you need to take away from it is that the work in this particular case starts with a strategic narrative, leads through a three-stage process of framing, probing, and experimenting, and then sort of concludes almost in a natural next step in the world of finance, in the world of investment, and particularly in the world of strategic investment. And that's what I'm going to be talking about to you today. So when I took on this role with KIC around the investment space, the mandate that Kirsten, our CEO, gave me was to figure out the relevance of investment capital for what we do, for system transformation through innovation. And the starting points were simple ones. The first was the realization that climate change is a complex systemic issue, and that in order to address it, we need systemic approaches designed for complex contexts. Now, we can have an argument about whether that's true or not, but for whatever I'm going to talk about today, just, you know, take it as a given. Otherwise, it wouldn't make much sense. So then the question is, you know, if that's indeed the case, what does it mean for deploying investment capital in the place-based systems that matter for human prosperity, where we live, where we work, where we play? In other words, in the real economy. And the obvious starting point was to look at the dozens or so of sustainable finance initiatives that are already ongoing, have been ongoing for the past 10 years, and to see what they have to offer. And it turned out that it's actually very little. And that has a number of reasons, including the fact that most sustainable finance initiatives are focused on secondary markets, so stock exchanges, which operate at quite a big distance to the real economy. Most of them are steeped in the traditional paradigms of finance, particularly in what I call the single asset paradigm. So this idea that we evaluate and transact on and measure success based on a single project, a single company, etc. And that approach biases climate finance activity towards projects that have very clear connections between input and output, and as a result of that, biases us to do a lot of energy projects. But there are other systems like cities, forestries, coastal zones, etc., where energy is important, but it's not the only lever of change that we need to pull. And sort of the last realization was that most of these sustainable finance initiatives try to solve the question of sort of the issue of mobilizing more money in a kind of more is better mentality, but very few ask themselves, once we have mobilized capital, what do we actually invest it in? If the goal is not so much to, you know, produce a static KPI like reduced emissions, but to actually unleash transformative dynamics in a system. Now, where that inquiry has led us is a thing we call transformation capital, and I call it an investment logic, just for the lack of a better term. But it is a coherent sort of framework of tools, methods, mindsets that you might want to bring to this challenge of deploying capital for transformative effect. So there's a technical definition. The practical definition here is it's a systemic investment approach for catalyzing sustainability transitions in the real economy. And systemic means bringing systems thinking to the investment process, particularly the theories around complex adaptive systems, for the purpose of a holistic notion of sustainability. Now, Climate KIC comes at it primarily from a climate change perspective, but you can apply to other complex challenges, and climate change isn't one thing. It's an undefinable beast that reaches into a broad range of environmental issues that is connected to social issues, questions of equality, of political participation, etc. So Transcap holds a very broad definition of sustainability. But importantly, it's focused on place-based systems, on the real economy. And so it doesn't try to work through the financial sector at large, which was what most sustainable finance initiatives try to do. It actually comes at it almost like from a bottom-up fashion. It starts with the systems where we live and play and work, and tries to call in money as a lever of change in service for transitions. So if you kind of try to figure out where does it sit, kind of where can we orient it in, it sits at the nexus of systems thinking and finance practice. And it tries to build a bridge between what the science is telling us about the need to transform systems and what the institutional policy frameworks are telling us, particularly the Paris Agreement, about making financial flows consistent. Now, from my point of view, and you can take me up on that, then we can argue about it, I don't believe that we have really built that bridge yet. I don't believe that we really understand how financial flows do relate to systems transformation. And in fact, that's what academia tells us as well. Those people have looked at this set. There's very little understanding for how to go together. And Transcap will try and build that bridge. It also plugs into a number of sort of ongoing trends and conversations in the wider environment. It tries to conceive of a different way of how finance relates to society. So not only to the public sector and the other challenge owners who are being tasked with leading the world to a low carbon future, but also how it relates to citizens and how we might, draw in innovators and other types of investors into the mix that are currently not part of it. And at the bottom in the economic sphere, it tries to contribute to the ongoing dialogue about how we can reimagine economics, and particularly values and what we value as a society, how we code the economy, who gets to participate in it, etc. And there's some very good work coming out of University College London from Professor Mariana Mazzucato, or out of Oxford from Kate Rayworth, that we want to connect with. All right, so where is all of this relevant? At Climate KIC, we have a number of systems innovation programs. The best known is the deep demonstration that we run in 8 different contexts. We have one on circular economy, where we work directly with the federal government of Slovenia on a whole economy transition from a linear model to a circular model. We have a deep demonstration on clean and healthy cities with 15 cities around across Europe. We also know that UNDP obviously has a very, very exciting and extremely compelling program in Da Nang, Vietnam, around waste management, and that you have started to also get involved in reviving the Aral Sea region, with my former colleague Scott William being involved there as well. Now, what all of these cases share is an ambitious transformation agenda and a need for capital deployment. Now, capital is not the only thing that's going to make those transformations happen, but it's one lever of change. And so in all of these cases, there's a question of how do you deploy financial capital if your goal is to catalyze the system's transformation. Now, my answer, articulated as a hypothesis, can be presented in what I call a design space. So a design space is a collection of elements, of tools and methods and mindsets that I believe make a coherent systemic investment logic. And I say that because it would be easy to just tweak the investment process from traditional finance in a few places and believe that that's going to cut it. You know, say, keep all of the same paradigms and elements in place, but maybe just expand your notion of sustainability from just green to also encompass some social dimensions. I don't think that's going to be enough. I actually think we need to fundamentally redesign what investments look like, which doesn't mean that we have to neglect the interests of investors and have to, you know, that all of the capital comes through this logic needs to be concessional or philanthropic, not at all. But it just means that you need to look at the investment process in a holistic way. So what does it mean? It actually starts with the people who are engaged in the investment process. And systemic investing places certain demands on the way in which people show up in the investment process, particularly on the way they relate to value and what they value and how open they are to considering value that are not just monetary in nature, in the way they relate to time and how they balance short-term thinking and long-term thinking and their capability to imagine futures that are structurally different from where their systems are today, and in their sense of agency. So their sense for how much control they have over making decisions in favor of the sustainability agenda. And that's one of the things that we've noticed from speaking to a lot of funders. There's a very low sense of agency amongst investors. Usually they say, you know, show me the project, and then if it fits my risk return requirements, I'll invest. But that's not going to be enough going forward. Investors have to take a much more active stance on engaging in this process. So then procedurally, the systemic investing will start with an intent and frame phase. So this is where we get clarity on the mission, where we establish directionality, get everybody on the same page. It then goes on to make sense of the system itself. So in the case of Danang, what is that system? How do we characterize it? What's, you know, the system of waste within the Danang metropolitan region? And system mapping is always done through a specific lens. The lens that we want to do it through is one that informs investment decisions. And that may be slightly different from doing the mapping for other purposes. Once we've mapped that system, both in the present and the future, we can start thinking about transition pathways. And that's important because systems can't just jump. They can't go from 0 to 1. They actually, they evolve gradually along what scientists call adjacent possibles. So we need to understand what are these adjacent possibles and how do we propel the system along those? What are the transformation strategies that are at our disposal for this particular system? And where might an intervention, such an investment, produce a disproportionately large effect? Those we call the sensitive intervention points. And for those of you who have read books about system thinking, or you've read Malcolm Gladwell's Tipping Point, that's all in the same direction, except that sensitive intervention points is an academic concept that's actually being studied deliberately in the context of sustainability transitions, which makes it so interesting for us. In a lot of cases, the challenge owners, such as the municipalities or the regional governments, they actually have done economic analysis, cost-benefit analysis, or marginal abatement cost analyses that we can draw in to augment our understanding of the system before we head into what I call the portfolio domain. The portfolio domain is the space where we inch forward toward investable propositions. So we want to look at the value models that are available in the system. So how can we identify, generate, and capture value? And what are some of the financial instruments that we can leverage? Noting that climate finance is often done through debt lending, but there's a much richer palette of financial instruments that we could tap into. We then also want to look at who's part of that investment partnership. And again, at the moment, there is a sort of a crude dichotomy almost between the public sector and the private sector, and the global north and the global south, and multilateral development bank and governments. And we believe that there's an opportunity to rethink how we make sense of those dichotomies and who we ask to be a part of the investment partnership. A good example is provided by the government of Indonesia, which has raised money for a government bond through Instagram directly from citizens. And it's one of the examples that show that there's actually, fintech is an opportunity to tap into a broader set of investors that haven't been participating in the process so far. What that should lead us to is two things, and I'm gonna dive into those a little more: strategic blending and nesting. So strategic blending is about creating strategic portfolios of assets that talk to each other, that are synergistically aligned, so that they can create combinatorial effects. So this is no different from what you do in your innovation portfolios, where you try to deliberately compose portfolio of innovation experiments that learn from each other. That same principle of synergistic composition should be applied here as well. And it is a departure from the single asset paradigm, which, if you look at this and think, oh, that's pretty straightforward and that makes sense. It makes sense to me as well, but it doesn't make sense to a traditional investor. Now, once we have that portfolio, or in the process of composing it, it's important that we nest it within a broader system intervention approach, where we act on other levers of change: policy and regulation, skills and education, citizen engagement, social innovation, etc. Because obviously those investments shouldn't take place in isolation. They should take place in the context of what we're doing in the system anyway. Which is why systemic investing is such a great add-on to portfolio-based systems innovation. It's almost like that natural next step once you have your innovation portfolio, to bring in investment capital. And the reason for why it's such a natural fit is because you may already have identified investable opportunities from your portfolio work anyway. But more importantly, you will have both the intelligence from that activity, and you have the capabilities of deploying capital in a systemic and connected way. So to actually then put together transactions, we can leverage sort of the plain vanilla structuring and fundraising capabilities of investment bankers or MDBs or DFIs. That's already in place. It's not something that KIC is going to replicate. And while some transactions may be a little bit more complicated, I would say structuring the deals is not actually the issue from a capability perspective. Understanding what goes into the portfolio is where we believe progress is needed. And then once we have the portfolios, we need to have a way of making sense of how well we're progressing along our impact pathway. And we advocate that we use a sense-making protocol, so a methodological way of understanding what emerges from the system and what it tells us about what works and what doesn't, and where follow-up investment would be particularly helpful. That is connected in parts to a need to understand transition dynamics and have indicators that measure those dynamics. So in systemic investing, the goal is not just to produce a static output like greenhouse gas emissions reduction. I mean, that's nice if that happens, but what we're really after is the dynamics within the system that we want to tweak, because systems do have self-organizing properties that we can harness so we don't have to fund it all the way. We only have to get it across a tipping point. And so we need to understand what are those tipping points and how can we measure them. And then you need kind of a risk and return framework to make sense for what are the risks, you know, that you need to manage for, and how might you want to make sense of your TROI, of your transformational return on investment, which includes a financial component, but is broader in scope. And then finally, there are a number of enabling factors that make this system viable, because it's a data-intense system, so you need a data and technology infrastructure, you need to do information and knowledge management. At some point, hopefully, there's going to be scope for defining methods and standards and maybe even innovate some of the financial mathematics. You certainly need a governance framework that controls for mission drift or mission retreat or unintended consequences. And you need a social architecture that holds it all together, because finance at the moment is a very depersonalized system. But if you are serious about systems transformation, you have to put the people back into it, and you have to create that space. I'd like to also touch upon something that's important from my point of view, and something that I believe is often overlooked, which is how do we actually create change at the scale that matters? And the scale we're talking about here is in the trillions of dollars per annum. And that scale is so high that it lies way beyond the sphere of influence of a single organization, or even, you know, a big one like UNDP. So I showed you some of these use cases where we want to bring that theory to. And obviously it's important that we make progress there. And if we actually have tangible outcomes in these places, that's wonderful. But those will be 4 places or 4 systems that we're able to nudge into a new direction. And there are thousands, tens of thousands of similar cases around the world. And neither KIC nor UNDP can be active in any of these. So we've spent quite a bit of time thinking about how could our activities reach into those stratospheres. And the only thing from my point of view that has the potential to diffuse to such an extent is an idea. And the idea here particularly is systemic investing. So the simple idea of bringing systems thinking to finance. And if you do that, this whole new world opens up that leads you naturally to reconceptualize the different stages of the investment process. Whether you actually land on the specific transcap hypothesis, that's not even so relevant. What's relevant is that you start looking at how you deploy capital through a systems lens. And so we've come up with this 3-stage impact pathway: manage millions, connect billions, inspire trillions. So the management of money in the field, that's a means to an end. And so is the field building effort. The ultimate prize we're after is triggering a mindset shift across the financial sector around how money is invested in service of sustainability. The way we want to progress along that impact pathway is through the Transformation Capital Initiative, which we have designed as a multi-year, multi-stakeholder open innovation initiative that fundamentally does 3 things. It does innovation work or applied research work to develop the concepts within the design space and anything we've not thought about yet. It will then work in the field, in real-world prototypes, to test that theory or parts of that theory and generate insights that allow us to refine the theory. Because something like that you cannot design at the whiteboard. You actually have to go into the field and test it and then design that learning experience in an iterative way. And as we do that, we want to build a field of systemic investors that spans different geographies, different disciplines, different systemic contexts, so that this idea of applying system thinking to investing takes hold. And yes, you may need a backbone team around it to plant the seeds and give it a platform, but the goal here really is to do it in a way that lets the idea diffuse as fast and as widely as it can. All right, and I'm gonna stop on that note with a little bit of a plug. We have a white paper coming out really, really soon. It's been in the making for 12 months. It's driving me nuts that it's still not out. But it will be out later in August. We're just putting the final touches on the design. So if you want to dive deep and go into the whys, the whats, the hows, the whos, there will be plenty of reading material for you. And if you follow me on Twitter, you will hear about it a lot in the coming weeks and months. All right, Courtney, I'll leave it at that for now. Very happy to take any questions, and I'll hand over to you.
Okay, fantastic. Thanks so much, Dominic. Lots of incredible insights. And as was mentioned at the very beginning, one of the reasons we really wanted to feature Climate KIC and a lot of the work that Dominic is spearheading is really this kind of nice toggling between a history as an organization of really testing and experimenting, as you mentioned, but also pushing the envelope onto these emergent models. And as you one of the key things you shared specifically was around, I think the inquiry that's challenging a lot of us, which is around how do you scale these things? And you said the idea is what scales. So I'm going to go ahead and, of course, and restate. We'd love to see your questions in the chat box or in the Q&A if you're joining as a participant on the webinar. That's the point of having this much time to at least dive into it. But one of the things, just while we're collecting a few of these questions in the parking lot, a lot of the writings that you've been sharing, as well as this most recent one where you had that image that Dark Matter Labs helped with around the city's transformation work, there's a key thread here about narrative. And given that you all have been really, working deeply in this field, could you, and understanding that a lot of this audience is a UNDP one as well, what are some of the things that you've been learning as you've been building a narrative? Because you're looking at building a new state, right? A new way of thinking about finance, so to speak, in very different structures. But you're having to actually, as you said, you can't jump from one system to the other. It has to evolve gradually. So if you had any kind of insights on the ways in which you're sharing the stories and what you've been learning along the way, I think that would be very relevant and interesting as well for us to hear. So it's less nuts and bolts. It's a little bit more on the strategy of literally scaling these types of ideas and testing it iteratively as you go. And in the meantime, like I mentioned, please, for anyone else, please park your questions. We're looking and we'll start getting to those in just a moment. So over to you. Yeah.
Sure. So, okay, I'm literally obsessed with narratives, and I could go on for this for hours, but I was very inspired by a book I read recently by Rob Schiller, who did a lot of work in behavioral economics, behavioral finance, and won a Nobel Prize for it. He published a book last year called Narrative Economics. And in it, he makes a very compelling case that economics is, to a significant extent, driven by narratives. So narratives being stories that people tell themselves about how the world works or ought to work. And he provides a bunch of very interesting examples, one of which being Bitcoin as an economic narrative around very interesting political and economic dimensions. Concurrently, I had been reading a book called Hitmakers by a journalist in the US who studies cultural phenomena, cultural products, and how songs and movies and other cultural products diffuse. And from that, I recognized the importance of telling a story and of building a narrative around what we're doing here, precisely because that's what I believe will propel us along this impact pathway. And the fundamental insight, the fundamental sort of, if you synthesize Transcap down to its core, it's very simple. It's just systems thinking and finance combined. And my personal experience was that when I made that combination early last year, that a door opened into that whole new world that wasn't really populated by much. But the design space that I landed on almost was like a natural place to end up on. So, lots of people are working on all of these boxes or on different issues embedded in these boxes, and I just put them together. But it's really, the moment you start thinking about system thinking in the context of finance, this is the stuff that emerges almost naturally, because that's the stuff you have to pay attention to. So again, we're working on the narrative, we're working on the stories, and the Transgap initiative is supposed to deliver the proof points and the stories that allow us to diffuse that idea into the sector. And that's why we're spending so much time and effort on telling that story, and why I think, you know, UNDP does a great job at telling its story about accelerated labs too. So, you know, the best you can hope for is that somebody else comes along and says, that's really cool, we're going to do the exact same thing.
Great, thank you. So we have a few pointers to some extra readings to do as well on top of that. So I'm going to just share a few of the questions that come up, and then you can answer them as you wish. But there's a few that are related specifically around this framework for measurement. So TROI, if you could share a little bit, when we talk about the indicators that are needed for transformation, I think this is a really popular question that rises to the top often, I imagine, that you get. What does that look like? We have some conventional metrics around SORI or other ways in which we've been looking at accounting for environmental or systems or social, but what does transformation metrics might look like to you? So that's one. Another one is around, and maybe this is a bit around the narrative thing, but just a curiosity about how do you pitch this when you were, because you gave us some examples of Slovenia and Vienna, as well as some intent of other spaces to also go and test in the field. But how did you frame it, and what was that pitch like? And then another one, so this will be the third one, and then I'll stop there before it becomes overwhelming. So this one specifically is around the race to zero by 2050, to succeed and to have a chance to effectively slowing down and stabilizing the global heating. Shouldn't it be very clear that avoiding and reducing the annual global volume of greenhouse gas emissions is the ultimate purpose and measure of success? Or are climate action and mitigation initiatives, for example, systems innovation as a means to an end, to accelerate this? So we have a few in the space around, you know, indicators and measurement and accounting in that sense. And then another one that's kind of give us a little bit more about how did you convince and share and get people excited about this work that you were piloting in Slovenia as well as Vienna.
Okay, let me start there, Courtney. So you need to pitch this to different audiences in different ways, because when you go and pitch it to traditional investors, they literally give you a blank stare. And there's so much that you have to go all the way to kind of field zero and try and bring them on a journey. The more they've thought about the systemic nature of the problem, the easier it gets. When you go and talk to governments, the response is overwhelming, because governments are at the loss, not just for kind of how do we deploy capital, but also how do we raise capital. And strategic blending is about the strategic nature of it, but you obviously want to also leverage the best practices from blended finance and catalytic finance to crowd in private capital. So that thing is still in play. And if you go to government and say, we actually have a plan for not just, you know, help you figure out how to invest, but also raise capital, then they're all ears. So from the perspective of a challenge owner, particularly from the public sector, the response is very, very positive. In terms of the race to zero question and greenhouse gas emissions, so I'm very passionate about this point. I do believe that we as a sustainability community have gotten certain things wrong in how we frame the challenge. And I think particularly the fact that we're so obsessed with emissions metrics and aggregate emissions numbers that all of our activities are biased now toward that one goal. Now, what we're neglecting in the process are things like the Jevons paradox or rebound effects that are empirically proven very, very solidly, and suggest that you know, if you put in place something that reduces emission in one particular place, you're not actually guaranteed that on a systemic level, you're going to have a net emissions reduction. There's also mounting empirical evidence about the idea that green growth, which means the decoupling of economic development and environmental harm, might be a myth. or might not be possible, or at least the empirical evidence that's out there says or doesn't exist in terms of it working. And I think we haven't really grasped the implications of that. If green growth is indeed not possible, or there's no empirical evidence that suggests that it is possible, then our institutional frameworks like the Paris Agreement and our compasses like the UN's SDGs are structurally flawed. So do I think it's, I think reducing emissions is vital, obviously, because there's a scientific link or a physical link between emissions and global warming, but a holistic notion of sustainability that encompasses environmental issues, including waste pollution, and social issues, including income inequality, gender inequality, etc. That's not about emissions. That's about a much broader holistic notion of sustainability. And if we just focus on one, we're not going to get the other thing done. And it's all connected, right? So you can't just say, oh, this is emissions money and this is gender equality money, and we're going to do those things separately. That's not going to work. Not in my view. Lastly, in terms of the transformation metrics and what T-work would look like, so that very much is a space up for design. Obviously, what investors will always want to know about is what's the financial component of it, what's the financial return, and you'll have to give them that. But then I think there's a really interesting set of questions around how do you make sense of transformation and how do you measure that? And the social, so we can take some clues from social scientists who study social movements and have developed pretty sophisticated methods for measuring things like narratives, right? And so, including through social media analysis. So that would be an interesting sort of place to start. What does the social movement academics tell us about how transformations take place, how they start, how they accelerate, how they land? There's other work coming out of the University of Utrecht and the TIPSI, the Transformative Policy Innovation Consortium, that looks at the more meta level how socio-technical systems transform themselves. Things like emergence of niches and the expansion of those niches, which by niche they mean is a subsystem that works in parallel to the existing system that you want to change. And so there's a lot of good work being done. What we have to do is translate that work into an investment context. And that's the design challenge for us.
Okay, certainly several challenges, and what's really exciting, quite a lot of fascinating questions popping up in the chat box. So what I'm going to do is just kind of pull out a few different threads and duly noted on a few that have a few, I think, double clicks, right? So, we can look up a few other things around paradox, and I think it looks like we already have someone that wants to do a master's thesis with you. So that's exciting too. Opening the appetite and ready for the main entree, right? So one of the questions here was, and this is, I'm just going to build a little bit on some of the discussion that you've been starting. So the two that I'm going to share, one is related to, the context of the risk in the country, so least developed countries, right? So when you're getting the challenge owners or challenge holders excited about not only just the opportunity, but also how to build a collection of investors, if you will, to raise the funds. How do you translate that into those contexts where the risk is a little bit higher? Or significantly, possibly much more higher. So that's one piece. Another question is around social capital. So one of the questions here is when there is not that case for ROI, right? In terms of there might be a poor ROI, which is why there is a deficit of investment of certain types of spaces and goods. How does this, even if there is this research around the transition in the design space and the systems thinking, how can this still solve this issue? Could it be, and the question is really more about, is it applicable to investment in social capital? And any thoughts on that? And the UNDP is also doing some kind of edge research around social capital and ecosystems in terms of how that has really built another bridge, if you will, in some of the response and recovery efforts around COVID. So certainly a salient question. Next week, we'll be talking a lot more about social capital ecosystems too, but just curious how that adjacent conversation may relate. And then also, again, very nuts and bolts, but when you are trying to convince investors to think differently, certainly they're looking at the landscape of the context, and risk is a huge equation traditionally in that thought process.
And,
so
Courtney, social capital, what does that mean in your context? How do you define it?
Well, I think I would want let's see, our friend who asked the question maybe to clarify a little bit how he's seeing it, because it's a question from him. I think on our side of the way we're looking at it is around these kinds of intangibles and relationships and networks that are able to, because they exist, there's a certain type of connectivity or, closing of the gap, if you will, in some of the social safety nets, if you put it that way, and in the context of COVID response, especially.
Okay. So look, I'm going to declare a certain degree of ignorance here, because I don't consider myself an expert either in LDC's context or on the question of social capital. Now, but here's where I would start. So on the risk question in countries. So yes, that's obviously a reality that we would have to deal with, and that's no different in Transcap than in, say, traditional climate finance. Now, on the question of risk more generally, I think that a systemic way of investing, actually, and I'll go to the nesting slide here again. If you deploy your capital in deliberate strategic alignment with other system interventions, particularly if those system interventions are led by the public sector, then there's an argument to be made, which we will try to prove, that actually your risk context changes. Your risk goes down because you're not making these in isolation anymore. You make it as a connected, in a connected way, in a way that almost turns, think of it as negative correlation, which is something that actually you want in investing, because it's what causes your portfolio to be diversified. So investors build portfolio with a view toward negative correlation. In systemic investing, you want to think about positive correlation. So how do your investments among each other make each other more valuable? And how can you make that whole in portfolio more valuable by aligning it strategically with other stuff that's happening in the system? By that I mean reducing the risk. Now, that's not going to solve for the country risk. And you'll have institutional investors who say, I can't invest in a low income country. So you will have to work with the tried and tested methods of international climate finance to address that. I'm also cognizant that we have developed this method from a very Europe-centric point of view. I mean, I live in Switzerland. It doesn't get, much further away from an LDC context than that. So I don't want to pretend that what we've come up here has been tried and tested in a low-income country context, because it hasn't, and I don't have the experience or the knowledge to do that right. Which is why we'd be really excited to partner with UNDP and develop a prototype in an LDC context with you and say, how can we bring the Transcap logic to that place? And what can we learn about how systemic investing is different in an LDC context than it is in a European context? On the question of social capital then, that I would say it all comes down to what you value and what your investors value. And I think there is a play, an application of some of this thinking to social capital as an asset, because it's not just about emissions reductions and waste reduction, etc. The idea of applying system thinking to investing is a viable one for all sorts of complex issues. And as long as you have complexity baked into it, I think the Transcap framework will give you something to play with at least. I think it becomes particularly interesting to think about social capital if you also think about citizens as potential investors, as the ultimate beneficiaries of those investments. And there's a bunch of fintech that you can leverage to draw them in. But one of the issues we have at the moment is that what the market values and what humans value, it's too far apart. So we need to bring them closer together. There's some good work being done by Dark Matter Labs around and actually a consortium out of Canada around civic assets. So what are, things like parks and trees and aquifers? What's the value of those assets to the citizens, and how can we generate that value, capture that value, and distribute that value in a way that's more equitable, and actually in a way that unlocks more financial flow into those spaces. So I'd say, again, a space to explore, certainly in terms of what the relevance is for Transcap, but I think there's, as long as there's a complex question in there, there's something that we can learn if we just think about it together.
Great, thank you. I think, well, we have a few more minutes. So I'm just going to pull on a few more threads of questions that have come up. Again, I think layering and building on a lot of what you've been sharing. So thanks everybody as well for chiming in with your comments and your questions. It's a really interesting dialogue for that reason. So just a few quick things that have come up. So one is specific around how do investment consortia and investment partnerships feed into this model? So when you mentioned people can get more excited about when you're able to show that there is a pathway for building a finance case, if you will, what does it look like to have that kind of a collective model of investments? Another one is around, actually from a tactical standpoint with this narrative. So narrative continues to come up. But when you're persuading owners of capital that a portfolio-based approach to sustainability is worth putting money behind, how do you do so when that is basically a huge reframe that you have to pull off from a general standpoint where maybe many traditional investors are standing, or perhaps, I'm not sure, and this is part of the question, do you just go to the people that drink the Kool-Aid already, are you also educating in reducing that learning curve, if you will, for mainstreaming this concept? Because you're really at the edge in many cases. A lot of what you're sharing today is certainly not, everyday common discussion. So those are some of the things. And I think just one last piece that threads into this quite nicely is the last comment here. So can you say a bit more about the emerging narratives you're working on? Because without much empirical evidence, built narratives that are clear, that are intuitive enough can shift mindsets. But some of this is not necessarily, there's not as much, let's say, convention or precedent to back up and say that this is a way to go forward, and we know for sure. So as you said at the very beginning, it's a hypothesis of certain degrees and source that you're testing.
So let me take that one. Yeah, let me take that one first. So absolutely. I mean, this is all, it's basically a bunch of slides, right? And the white paper, and it looks fancy, but it's just a piece of paper. So we absolutely have to bring it into the field. We also are cognizant that very few sustainable finance initiatives have academic supervision. And we believe that's a structural shortcoming because you operate with no anchorage to the scientific method, and then you see people go off into wild directions of theories of change that just don't hold. So we will bring on obviously our community. I mean, it's not Climate KIC alone. If you can build around this circle here an image with dozens of logos of organizations who are connected to this already. We'll bring them along to help us put it into practice through the prototyping. And that's where the empirical evidence is going to come from. And we have a long list of KPIs or sort of sub-questions that we want to test. How do you persuade asset owners? And where do you go? So my personal experience is that when you're in innovation and you work with at the sort of the frontier of what's possible, you're probably too far away to bring the mainstream along. And that's backed up by observation from my career before Climate KIC, but also as I was trying to socialize Transcap. It's just too much of a gap. So where you need to go is to the people who already get it somehow. You need to go to the investors who understand the systemic nature of the problem and have started to probe in that direction. Because it makes it infinitely easier to talk about it in the first place. Interestingly though, I would contend that actually a mindset shift is on the way. And COVID has catalyzed that. So some of the stuff that I'm talking about in Transcap would have been considered esoteric even as late as last year. The pandemic has made some of these concepts, blown them right into the mainstream. So the social dimension of investing, it's now a thing, and people need to pay attention. The European Union came up with a just transitions mechanism as part of the European Green Deal. Mark Carney speaks out for realigning human values and market values. Hiro Mitsuno, who was chief investment officer of the world's largest pension fund, said, we need to take a systemic approach to it. So, you have cities like Amsterdam and Copenhagen adopting donut economics. So this stuff is happening. And the World Bank has put out a report on transformative climate finance and said, we think the single project approach has its limitations. And so, don't take it from me, go to these sources and look what other people are talking about. And you see those bits and pieces bubbling up where you say, oh, I think something's happening here. But if we did something that appeals to the mainstream, we wouldn't be pushing hard enough. Our job isn't to build a mainstream viable product. Our job is to push the boundaries. And by definition, that means you're going to get a lot of blank stares. Finally, on the investment partnerships, there's different ways of structuring those. You can all structure them in one contractual agreement, maybe wrapped within a special purpose vehicle, but you can also have a much looser coordination mechanism that may be contractual or may just be sort of committal, as in we agree to align. But obviously, the stronger the mechanism, the higher your chance that you avoid mission drift, because you have to stay at it, right? This isn't the method where you deploy some capital and you walk away, and you hope because the biogas plant is going to stand for 20 years and you don't have to care about it. You actually have to stay with it, with your portfolio. You have to invest in continued learning and sense making so that you can extract intelligence that informs your follow-up investment decisions. So it's not like we're coming up with an asset allocation at the beginning and throw it all into the system and then move on. This is a much more kind of a sequential, a staged, a longer-term process, which is why it's so important we have a social architecture around it.
Great, thank you so much. We are just a few minutes past the hour, so we're going to move towards wrapping up, but a few kind of, I think, low-hanging fruit questions, and then just also a mention to everyone that's on the call. There was some writing that was shared. It's on Dominic's Medium post around systemic investing, and we were discussing this yesterday. I was saying maybe there's something that we could pull up that we could share to people to check out before the session. And said this is just as relevant now. And I love the comment you made that COVID has actually just made so much of these things that seemingly were esoteric, even possibly a year ago, so much more relevant. And we're noticing this mindset shift happening at speed and scale. As you said, scale is the idea. So thanks again for being so frank and honest and open, and transparent, of course, with where things are going. So just the last two quick, easy ones. And then I would love for you to share with us kind of what is the thing that you would love for us to take away with us as a provocation or a thought out of the many that have already been shared and offered? So very simply put, question was around if there's any initiatives in the region around Southeast Asia, Cambodia, for example, people seem to be interested to connect. And of course, we have Da Nang in Vietnam that is on the potential radar screen, but maybe there's some other ones that are outside of the UNDP space. Would love to hear about that. And then another question is around, there's all the rage and discussion again is around, futures thinking and foresight. Not that this is a brand new thing, but again, COVID has highlighted this notion around anticipatory ways and scenarios. Would you say that how does this connect to the conception and the development of these frameworks that you're talking about, specifically around Transcap? And like I said, the last thing, if you had any final words or thoughts or provocations for us, we'd love to hear that before we wrap up.
All right, brilliant. So what about some other initiatives? So Climate KIC has a portfolio of what we call deep demonstrations, which are portfolio-based systems innovation programs where we work directly with challenge owners. We have one around what we call the just transformation of industry in places like the Basque country in northern Spain, but also in places in Poland, and now we're working on one in Germany around coal transition. So transition out of coal-dependent energy industry. We're in conversation with our colleagues from Climate KIC Australia around a program focused on a landscape, so landscape as a system and how we can transform that. We obviously have the deep demo on cities that we're very much involved in. So there's, in all of these places, there's a challenge owner, an ambitious change agenda, and the realization that we need some investment capital. And so in all of these places, we'll try and bring Transcap into practice. Now, again, what we lack is a prototype in the context of a low-income country, which is a different context and one we'd love to learn about more. In terms of future thinking, we have started to explore that within Climate KIC as part of a deep demonstration that is a bit of an unusual animal because it's not place-based, but it explores ways of developing and mainstreaming long-termism across different domains of decision-making, including finance. And we've partnered with, amongst others, with UNESCO and an individual called Real Miller, who is one of the world's leading experts on futures literacy, to start probing what are interventions that might help us unlock change in that perspective. From our work with challenge owners in the field, we understand that it's extremely vital that the people we engage with, both on the investor side and the challenge owner side, have some basic understanding of futures literacy, which is why in the design space, in the people domain, there's a box called time. So how do people relate to time, and how do they make sense of short term and the long term and the midterm, etc. So it's in there, and it's a quality that we absolutely have to foster, because when we go into the field and we talk to challenge owners, it's amazing how many people struggle imagining the future in a way that's structurally different from where they are today. And so when you have a policymaker planning, say, a low carbon transportation system with the paradigms of 2020 and not the technology paradigms of 2040, you have a mismatch between where the policymaker wants the system to go and where its self-organizing property is leading it down toward. All right, finally, the one thing you want to take away. So in sticking with my impact pathway, what I would like to encourage all of you is, when the topic of investing comes up, just apply a systems lens to it. Apply your systems thinking to questions of how do we deploy capital. Don't be so obsessed about how do we mobilize capital, where does it come from, how can we crowd in private capital. Those are important questions, but there's an army of people working on them already. What very few people think about is, once that capital is mobilized, how do we actually deploy it if the goal is systems transformation? And just see what you come up with.
Great. Thanks so much. I think you've been super generous with your time, and want to again thank everybody that also invested their hour, as we speak of investments, into reflection and learning, which is so critical for moving and evolving from different system 1 to system 2, as COVID is inviting us, especially, to do more than ever before. So same time and same place next week. We'll be actually having a panel discussion, again, around the role of social capital a little bit more, but specifically around systems change too, and what does that look like, and what kind of levers do we want to be, and lenses do we want to be looking at. So Dominic, we will be certainly sharing the recording. I think you were also quite generous. You offered a little bit of your contact information. If we're able to send the slides as a follow-up to everyone that registered, that will be, I think, just as wonderful. Understanding this is a working out loud kind of conversation, and this white paper will, I think, be on the way soon, that even bridges it even further. So with that being said, big thanks to all, and look forward to seeing you soon again. Cheers. Take care. Thank you. Bye.